We're talking about the Chinese currency. The other side of this pair is the dollar and the incredible strength that we've seen over the past few weeks. And I'm wondering whether we've seen a shift in the consensus around the dollar, that basically is the consensus now that the dollar will continue to strengthen from here?
I would say it is definitely not the consensus, Lisa. I would think there's definitely probably maybe a 75-25 consensus that the dollar will weaken over the next 3, 6, 12 months. Now, at the beginning of the year, that was probably 90-10 or maybe even higher, to your point earlier. So this consensus is shifting a little bit, and so is positioning. We have seen a lot of those dollar shorts pulled out of the market, but on net, the market is still short the dollar. So there needs to be more position squaring, and really, the pain trade is still dollar higher, not dollar lower.
All right, so what does that mean, Eric, in terms of how much support there could be to the dollar going higher, given the fact that people are not heavily positioned long and at a time when we have more concerns about global growth with the resurgence of the Delta variant?
Well, yeah, thinking about the technicals, and we could see, especially if we see the Chinese currency move lower 2-3%, could easily see a new high in the dollar index. And to me, though, you have also something to counterbalance that, which is, will the Fed actually enact an early taper, and will the Fed, sort of following on from that, hike rates before markets are currently pricing that in? And that's where we're a little bit skeptical. So as we get into Q4 and we see the Fed continue to be patient on taper timing, we do think that dollar strength will start to fade a little bit.
But with the dollar strength we have now in that Fed equation, and as well the equation from China, what does the picture look like to you for broader emerging market currencies as a basket?
Well, in the short term, Kayleigh, it's a negative situation. You look at high frequency equity debt inflows into emerging markets, they remain very much flat. And the vaccine and growth situation in emerging markets remains tenuous. Plus, you got the Delta variant, which is really weighing on things. But as we get into maybe not so much the end of this year, but the beginning and middle of next year, if we can really put the pandemic behind us, get vaccinations where they need to be in the rest of the world, you're talking about a very strong global growth backdrop, a lot of pent-up savings, still very accommodative policy, and underinvestment in emerging markets for the past 5 years. So to me, the longer-term backdrop for emerging markets is very positive.
And a lot of the emerging market central banks already are tightening. They are already doing that. Well, we're just talking about kind of the anticipation of it when it comes to the bigger central banks. So how does that work into your thesis?
Well, unfortunately for some of these central banks and really for their currencies, what's really driving the market now is the Delta variant, growth concerns, and the broader dollar trends. Look at Brazil as a prime example. Very hawkish central bank. The currency is not really gaining much. Mexican peso as well, a little more sort of back and forth from the central bank there, but you're not seeing strong peso gains because the dollar is well bid. So it needs to be a situation where we get past the worst of this pandemic, policy remains accommodative, and the dollar starts to fade before these emerging currencies start to recover.
What is the level of breakout here? What is the symbol on Bloomberg Dollar Index or on DXY, or frankly, to look at a single pair on Euro where you say dollar breakout to new strength?
Well, probably to me, it's 94.50 on
94.50, yeah.
Yeah, I think, and you need to see a decisive close above that.
On Euro?
That to me is a signal. On Euro, probably 116, below 116.
A 115
115
print
would be very decisive.
Yeah, 115 print. Yeah, I agree with that. I mean, it's really, really interesting right now. Lisa, pick it up, please.
Well, I'm just wondering if we can go real broad, Eric. And I'm wondering what the foreign exchange implication is to some of the supply chain disruptions, given how important trade is, if anything, given the fact that the U.S. has typically been importing so much and exporting so many dollars. What happens if that dynamic starts to shift and some of the supply chains get rejiggered in any kind of meaningful way?
Well, Lisa, one of the most important interplays for the FX market and global trade is that so much of global trade is invoiced in U.S. dollars. So if you think about when the dollar starts to get really strong, that tends to be very negative for global growth and global trade in particular, because exports and trade in general just is more expensive. Plus, in thinking about the dollar lending that needs to take place to facilitate global trade, that too becomes more expensive. So really, the dollar higher is not just a pain trade for the market, a pain trade for the global economy as well. So there's some real reasons to keep an eye on the dollar here as we test these new highs.